Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, July 30th, 2015. In this video, I wanted to go over the biotech sector. I think the biotechs offer one of, if not the best shorting op in the second half of 2015 here, so in the coming months. I have a couple biotechs currently listed as short ideas on the site and plan to add some others. Let's start out here by looking at the biotech ETFs. So there's several out there. The two that I follow are PBE and IBB. They just have different holdings, so the charts are going to look a little bit different. So we're going to start out with PBE. This is just a gem of a chart, in my opinion. We're looking at a 10-year weekly chart, so a weekly time period covering 10 years price history. And what stands out to me in this chart are these three bearish rising wedge patterns. You can see here well-defined uptrend line, and what I've noted here, I've measured from the peak where prices peaked out. And of course, if you look down below, what I always like to see to confirm a bearish rising wedge pattern or any type of potential tops in a stock would be divergence. So we have negative divergence. So in the last decade, we're looking at here we've had these three divergent tops. This one resulted in a 27% drop from the highs down to the peak, or to the trough, peak to trough. Again, a 13% drop from the highs to the lows. When that, again, at the very high here, the wedge broke down. The drop was a little less than that by the time the wedge broke, obviously. And now we're looking at what I expect to be a 24% drop from the recent highs. This is just a beautiful wedge. When trading, you'll notice the larger a wedge pattern, the larger the expected drop is, and that makes sense. This was a pretty big wedge back here, a 27% drop. This wedge was smaller, 13% drop. This is a big wedge, very steep as well. That's another factor, another thing you have to factor in. Typically, the steeper the wedge, the sharper and more rapid the price drop is once it breaks down. So I'm looking for at least a 24% drop from the highs. These are additional price targets. Whether I add these as official price targets or not will all depend on if and when, or what the biotechs are doing at the time, and if the broad market has clearly rolled over too. If we have the broad markets in a downtrend, biotechs in a downtrend, and we approach this level, well, then there's a good shot that support may be broken. As always, I expect a reaction off the initial tag. That's a pretty nice support shelf right there. So if we do fall down to that, which is at the, let's try to tell you that number. It's showing around, call it roughly 48. It's showing 48.12 here. So from that level, I'd expect a reaction, meaning a bounce or a consolidation, and then a move lower. But again, if and when we get there, I zoom in, I'll take a look at the daily charts, the 60-minute charts, and try to gauge whether we're going to have a bounce, and if so, what the magnitude of that bounce would be. So that's PBE. Let's take a look at it from a daily time frame. Before I do that, let me just go back and mention, when trading the weekly charts, you want to see a weekly close below that trend line. It's not uncommon. As you see back here, there was a nice intra-week break, but prices managed to close back above there. So for longer-term traders, and I'm looking to position short, I'll talk on that in a second, probably take a short position in one of the leveraged biotech ETFs for a multi-week, probably a multi-month swing short trade. I'll do that in addition to shorting some individual stocks, which I'll touch on here in a minute. But we want to see a weekly close, and if you take a look, we're right on that trend line right now. So if we have another bad day, it's possible to see a close. I'd like to see it, by a fair amount. I'd hate to see it close just right on that trend line. But if and when we do close below that trend line, especially two consecutive weekly closes, it'll pretty much be safe to say that the biotechs have broken down and there'll be some additional selling to follow. Now let's zoom in on a daily time frame to really hone down that entry. What I have here is a set of parallel trend lines. You can see the divergent high. Again, this is a daily time frame, so just going back the last few months, prices making higher highs against the MACD and the RSI making lower highs, i.e. negative divergence. Let's zoom out to a 2-day time period chart here. This just gives us a little more scope. This is now 4-year price history, and you can see that we have the blue downtrend line. So if you wanted to be more conservative on your short entry and try to minimize any whipsaw signals, you want to see this blue trend line break. We've had 1, 2, 3, and the next tag of that will be 4. Well, if we have a reaction, I'd expect something to happen there. But I also have this alternative, the white trend line, for those of you that might want to get a jump on shorting PBE or the biotechs. Break of this white down trend line may do the trick, because there's multiple tags there. We had this one intraday spike through there and close back above it, so that's another trend line to short. There's 100 ways to trade, or take a short entry here. You can take a partial short entry if you're aggressive on the break of the white trend line. But again, if you're going to take a full position in the biotech sector and try to put on a swing short, then you want to see that weekly close below the weekly uptrend line on PBE, which would coincide with a breakdown below this blue uptrend line. So that's PBE from a daily time frame. And let's look at the other major. There's several out there, as I mentioned, but as far as liquidity goes, the two big ones are PBE and IBB. IBB is the iShares NASDAQ Biotech Index Fund ETF. The majority of biotech stocks are in the NASDAQ. And what we're looking at here is a weekly chart. This is an uptrend line off the 2011 lows, and we're quite a ways from that now. So I do expect a reaction if and when we get there. What you can do here is draw. I can add another, what I would call minor or secondary uptrend line, and that forms a nice bearish rising wedge pattern. So let's color this one blue just to distinguish it. Okay, this is one to watch if and when we get there. So my expectation here, we have IBB moving up in this bearish rising wedge pattern, and just like PBE, we're right at that now. So any additional downside, which I expect to happen soon, will put us below those weekly trend lines and trigger a sell signal. So my expectation on IBB would be a move down to this trend line. Hard to say if and when it hits that, but if it does, let's say at this point here, let's just say it fell down. This would be the end of August right here, and that would be, trying to put the crosshairs right on the line. Yeah, call it the end of August or so. Somewhere in there would be my expectation. And then most likely see a reaction off the initial tag of that trend line. Initial tag meaning the first time it hits it from above. A reaction be a bounce and or a consolidation, and then a breakdown ultimately, and see IBB fall down to this 278 area. That would be my longer term swing target on IBB. Just like PB, as I mentioned, you had these divergences in place confirming. Let's take a look at the daily chart on IBB. A couple things to note here. This chart looks a little bit busy, but the main thing I'm watching are these yellow trend lines, which form a broadening wedge pattern, aka megaphone pattern. So we've had just this second tag off the top of that pattern. You want to look for at least two. Typically these have 2 or 3 tags on each the upper and lower trend lines. So here's the bottom of that ABW pattern. It's about 3 tags so far on the bottom. This is a horizontal support level, comes in around 359. That's a level to watch. Break of that will most likely bring prices down to this trend line. And let's zoom out here to a 2-day time period just to make sense of all those trend lines you see coming in. This goes back 4 years. So again, this is a trend line that I'll watch. Would be an initial downside target for IBB. You can see here's a wedge that has broken down and back tested, quite a back test up along there. So you have several things going on there. Breakdown and back test of this white line. You have prices in that broadening wedge, which is a potential topping pattern. And then we have this trend line. And if and when that one breaks, then I imagine the IBB, I would say, is going down to this level here, about 278. That would be my initial downside swing target if putting on a multi-month swing trade. How to trade the sector, I'll get into the individual stocks here in just a second, but there's several leveraged ETFs out there. Many of you know that I like to go short leverage ETF instead of buying one long. If you buy those leverage ETFs long, they're good for a day trade, at best a trade that might last a couple days. But due to the decay on those, you're better off if you want to do, let's say, short the biotech sector, instead of buying the leverage short ETF, which in this case there's a couple out there. There's BIS and LABD is one of the new ones. LABD is a 3-time bearish, but if you were to use this as a shorting proxy for the sector, I can assure you that the decay over time, especially if you're short the biotechs for a couple months, you're really going to eat at your returns due to the decay. And for those of you not familiar with what I'm talking about on decay, if you go to the site, right side of the chart, go to the ETF Center, which is right up here in the menu, and then I have this frequently asked questions on ETFs. Click on this one here. Is there a disadvantage of holding a leveraged ETF over a period of time? And I give a pretty detailed explanation there. So what is my proxy or my preference on shorting that? There's two options. BIB is a 2-time long biotech ETF. You could certainly short that, very liquid. And then there's LABU, which is the 3-time bull. It's a new, relatively new. You can see it's only been trading for a couple months now. The spreads, I note, are pretty substantial. But there's always going to be liquidity, some liquidity in these ETFs. You're not going to have a great entry or exit, but you're not using this for a 1 or 2 day trade. So what I typically do, I'll split the difference. I'll look at the spreads, the difference between the bid and the ask price, and I'll set my buy or sell short order somewhere in the middle, a little bit closer to the bid price. If it doesn't fill, I'll move it up, and usually they do fill you if you split the difference on those. They're trying to create liquidity in these, so typically they'll fill you. But again, this would be my preferred multi-week or multi-month shorting proxy for the biotechs, LABU. And as always, I won't use the charts of LABU to time my entries and exits. I'll use the chart of the sector itself. So I'll be watching PBE and IBB for those breakdowns that I mentioned. Okay, from here, as I like to do, I'll cover the top holdings. I'm not going to do all top 10. I'll just cover the top 5 holdings in the sector, at least by the top 5 on PBE. As I mentioned, IBB has a different set of top 5 holdings, but there is some overlap, I think, at least one of the companies. And then I'll talk on just a few more individual biotech stocks that I think hold a lot of promise as short candidates. All right, Gilead. This is the largest. I'm showing a market cap of over 166 billion. So this is a monster in the biotech industry. It's also one of the top 10 in the Nasdaq 100 or the QQQ. So Gilead. This is a weekly chart we're looking at. 10-year time history. Beautiful chart. We have this nice uptrend line all the way generated off the late 2011 lows, and what we're looking at, we had a breakdown of that trend line here and a higher level back test. So a breakdown, back test, and let's zoom in a little bit. Price is already starting to roll over or have moved lower since then. When we made that back test, we also printed a divergent high. If you look down below, this is a weekly RSI, the PPO, which I prefer to use in lieu of the MACD on the weekly time frames and stocks with large price swings. So divergent high, breakdown and back test of the primary uptrend line, and my first target on Gilead would be this is roughly called 84.40ish, somewhere around there. I'll have to, if and when I put this as an official trade ID on the site, I'll put up some exact suggested buy to cover price targets. But either way, that's where I'd be looking to see Gilead go in the coming weeks to months here. And let's take a look at a daily chart. This is a near-term uptrend line. This goes back to it's about April 14th or so. The April 14th lows, we have 1, 2, 3, 4, 5 tags. We just recently kissed this trend line for the 5th time. So if if I were to short Gilead personally or add it as an active trade ID on the site, my entry would be on a break below this trend line, and ideally a close. You can see we pierced it intraday there, but any substantial break, my best guess is the next time we revisit that trend line will be the last time. It'll probably break down from there, just looking at the charts. It's not drawn out here, but if you look at the MACD down below, prices are making lower highs. RSI making lower highs against prices making higher highs. So we have negative divergence on the daily time frame here as well, which is one of the reasons that I think that Gilead will break down here in the coming days to weeks. All right, moving forward. Next one would be Amgen. Okay, Amgen, we're looking at a daily time frame here. We can see this white line and the one down below forms a rising wedge pattern with negative divergence in place below. So one could take a shot here. We also have this horizontal line, which is horizontal resistance. We have 1, 2, 3, 4 attempts to get through that level. And the last one, as you can see, we pierced it intraday, but we failed. We're back below it. So Amgen is really having a difficult time getting above that 172, 173-ish level. And so one could certainly short here at the top of the wedge and that horizontal resistance level with a stop not too far above. That's a very objective short entry. Bit aggressive because, like I said, we still haven't seen the sector break down, but you could certainly try to short there for either a move down to the bottom of the wedge or hold on in anticipation of a breakdown, because I would all but assure you, if and when the biotech sector breaks down, as talked about with PBE and IBB, that it's only a matter of time that Amgen goes down, with it being one of the largest components of the biotech sector. So again, the negative divergences in place indicate that wedge is likely to go in the coming days to weeks. Here's Amgen from a weekly perspective. Going back to the bottom, the lows back in mid-2011, we have this nice uptrend line here, and we had that intra-week break, but we managed to close right back on or around that trend line. Here's the resistance. As I said, Amgen is really punching through here. It looks like it's forming this ascending triangle. Those things can break either way. Obviously, an upside breakout, a sustained move would be bullish. But again, everything else I'm seeing in the biotech sector points to the fact that even if we see an upside break, I would give better odds that would be a fake out. We might see a temporary move up, which will get sold into, and then ultimately we see a breakdown of this trend line and Amgen head lower with the sector. All right, next one up, BIIB, Biogen. Nice chart. We're looking here at a weekly chart. This is an ascending price channel bounded by this trend line here off the 2010 lows and this upper trend line here. I could extend that out, but you can pretty much see the gist of that. So Biogen's been moving up in this ascending price channel. This one's already clearly broken down. And, in technical analysis, when you look at that weekly candlestick, big red impulsive candlestick once that trend line broke. So that helps to validate that trend line. The divergence is in place. It had a divergent high when it printed these recent highs. Actually, I haven't modified this chart in a little while, so you can see it there. That was a divergent high in Biogen. And from a daily perspective, we have this minor trend line here. We had the big gap down. I believe that was probably an earnings-induced gap down there that broke it down below that weekly trend line. And right now it's struggling to try to regain that and hold that support level. If it can't do so, Biogen's probably headed a lot lower, and my best guess would be this gap here, the bottom of this gap. The gap is to the left of the chart here. So, maybe 253 if it backfills the bottom of that gap. But I would expect it to first find support at the top of that gap right here, 270.84. So let's say 271. So if you wanted to take a shot at Biogen, that would be my initial downside target. I always like to cover a little bit above support. So I'd say 272, a little north of that would probably be a good place to set a price target on Biogen. Okay, Regeneron. This is another big one, about a $57 billion company, biotech. Very nice pattern here. I mean, wow, look how well defined this trend line is. Multiple tags on that trend line. So it's forming this rising wedge pattern, confirm with the divergence here in place, negative divergence. I'd say it's only a matter of time before this trend line breaks. If and when that does, that would be an objective short entry on REGN. And we have price targets here around we'll call it roughly 490 area. Next one will be down around 434-ish. And then ultimately over time, I could see that one working its way down to about the 366 level. Let's take a look at the weekly chart real quick. All right, here's the weekly chart. This is a longer term trend line. This one I have, this white trend line here I have generated off the mid to early 2010 lows. And you can see from a weekly perspective, this stock has been wedging higher for literally a couple of years now. And you can see the divergence as it does so on both the RSI and the PPO. So that weekly trend line would be a longer term sell signal. And that's why I'm viewing the biotech sector as, the potential for a long term swing short, possibly into year end and maybe even beyond. Over time, looking at the weekly chart, I'd say this one's going down to that 271 area. And here's a trend line I have here. This is an alternative longer-term uptrend line, which would probably be the final downside target should Regeneron break down. And just to give you an idea where it would be, that's, if it hits this target, that trend line down there, you're looking at about depends, of course, where and when it hits it, but you're looking at about 55, maybe 60% drop in the stock. And based on how much it's come up, and looking at that P ratio, it wouldn't surprise me to see that at least a 50% correction in this stock. Okay, and rounding out the some of the bigger names in the sector here is Alnylam Pharmaceuticals, symbol ALXN. This is a weekly time frame, so you have this nice, well-defined uptrend line. Prices are comfortably above that uptrend line now, but you can see here these sharp divergences in place. The stock has made a very steep divergent high, negative divergence, and is most likely headed lower to visit and ultimately break this trend line. Okay, a couple other names that I like. BMRN. This is another rising wedge pattern, divergent high, same story. This is a very nice target here, this gap. You can see this large gap from, what was that, roughly March 19th, I think. Trying to get the crosshairs right on there. I'm having a hard time doing so. Yep. June 19th. And there's that gap support there, top of that gap around 132. The stock's at 143 now, so again, I expect that we'll more than likely have at least some type of reaction on the next tag of this trend line, but I expect it to break the bottom of that wedge. And so stock's currently trading at 143.19, and as I said, more than likely going to at least 132. So that's a pretty nice move down, and ultimately I could see that stock working its way down to this 111 level. Okay, here's another one, ALNY. This is a weekly time frame, very steep rising wedge, nice, well-defined trend line, negative divergence. Same story on a lot of these stocks. It's just we're going to see these trend line breaks. And believe me, this isn't coincidental. This is why I like to start out always looking at the sector itself. We looked at PBE, IBE, looked at those trend lines, and then when you look at all these stocks, the majority of these have similar trend lines, and when one breaks, they all break within a short period of time. So you can see they're all poised for pretty sharp moves lower, and like I said, one of the reasons I think these are going to break down soon is look how close we are to the apex on these wedges. This is about where most rising wedges do break down, and these are some potential price targets for ALNY. And just to zoom in to really hone down an entry on ALNY, this is a 2-day period chart. Again, every candlestick represents 2 days of trading action, 4 years price history on this chart. And this is a very nice trend line to watch. So if you can replicate this on your chart, I would set an alert for a trend line break here, and that would be your short entry. negative divergence. It's not drawn here. You can see that. Those are the price targets there. And this is really zooming in. So we're not too far below that. So I would say, to be safe from around 116 or so, that trend line will have given way. And I'll probably add some of these names that I'm talking about today will be added as official trade ideas on the site soon with some static or dynamic charts that I'll post on those. This is UTHR, United Therapeutics Corp. This is one that's already broken down. We had this trend line here, this uptrend line. We had a clear breakdown, and this one's already started to move lower. You can see the failed double top high, 1-2 attempts to get past that 190 level, followed by the breakdown. Not the most objective short entry. Most of the trade ideas I post on the site, I try to post ahead of time in anticipation of before the breakout or during a breakout as a stock is breaking out or breaking down. This one's broken down, but just to give you an idea where it's going, you could still always short it here. There's probably some resistance. Put a stop probably above 169. Keep it pretty tight, but I feel pretty strong that this stock's going down to this 138.21-ish level in the coming days to weeks. Right now, it's struggling. You can see here, I don't know if you can make out this red line. That's the 200-day moving average. So it found a little support there. But once that 200-day goes, which is just below, then that stock's probably moving down to at least the 138.20-ish area. Okay, this is Halo, Halo, Halozyme Therapeutics. Very nice looking rising wedge pattern. Don't know what else to say about it. It's very clean. Divergence is in place, so you have a very objective entry if and when this trend line breaks, which will be soon, in my opinion. And this would be the target zone or two targets, however you want to do it. I see the first support coming in around the 1830 level. Next support around 1675-ish. That would probably be my final target on that one. Okay, and to wrap it up, here's ISIS, ISIS. With a name like that, how can you not want to short the stock? I thought they were going to do something about that name. I thought I read a while back they were going to change it, but I guess they haven't yet. ISIS, this is a weekly chart here, 10-year price history. 1, 2, 3 tags of this trend line, divergent high in place, indicating that this trend line sooner or later will give way. We're at trend line support right now on the weekly chart, so you do want to see a weekly close below that to help assure an entry or minimize the odds of taking it on a false breakdown. Although we look at the daily chart, and this thing looks to have just broken some pretty decent support. I have this white horizontal line. If you note on the left of the chart here, I like to use these volume at price histogram bars, and you can see how they tend to work as support. It's very thin below there. A lot of the trading has occurred here in this price. There was a lot of trading activity that went on there. That stock was really bouncing around that range since all the way back to almost November of last year, and recently broke down, back tested that support, former support, which becomes resistance, and has since turned lower. It's also failed at the 200-day moving average. If you can make out that red line, I have it. The color turned down a little bit right now, so it doesn't stand out very much on the chart. So we failed on the back test of that broken support, and the stock has already started moving lower. That's why I do think that weekly trend line will give way soon. So that is ISIS. Okay, that wraps up the trade ideas. This has been Randy Finney with Right Side of the Chart. And as I said, I will more than likely add some of these. I think there's already a couple biotech short ideas on the site right now. And again, everything that I covered today I think looks good. But you do want to see the sector break down before you fully engage it. In other words, I'm not saying put all your portfolio in there, but if you're determined you want to have 10, 20% of your money in the biotechs, I wouldn't bring it to that full position until you see these weekly trend lines go. Okay. Have a great day.